an ultra high net worth accounting firm. So most of our client base was about 250 mil net worth or greater. I started as a topless waiter. We think you earned 150 grand a year, even though like you've put through maybe 20 grand on your bank.
Like social media.
And they do. Or some of them go, well, direct deposit into my rent. Biggest thing that you can probably do is obviously just record keeping. Content creation's probably the one that you can claim the most for, I feel. Just because like, travel's easier to prove.
Yeah.
Because you're traveling with content. You're probably looking at like 80, 90 audits a year.
Wow. Oh, so clients audited or you personally?
All of a sudden, I can't buy a house. Oh, I've got to do all this to buy a house. I can't do it.
Yeah.
And therefore, you can't grow, you can't invest, you can't do anything else. Like they're making a shitload of money, and then the partner's like, well, you've got all this money and all this stuff. I'm taking half of it.
And so what do you tell the creator?
Wow, I feel good. I knew that I would now. I feel good.
Back to another episode of the Spicy Waitress Diaries. I'm your host here, and this is Opal. And today we're sitting down with an accountant.
So today we have Ryan Jones. Ryan is a chartered accountant for the sex industry. So welcome to the podcast.
Thank you, guys. Thank you very much for having us. I appreciate it.
Pleasure. What's your background and how did you get into accounting specifically for sex workers?
Okay, so my background was after high school, I got a cadetship. And what a cadetship is basically like you leave high school and you get hired by like top tier accounting firms and that sort of stuff. So as soon as I left high school, I became a full-time accountant and I studied uni at night. So big accounting firms will look at like people that are interested in accounting that are obviously on the higher end of having academic marks and all that sort of stuff, and then they'll poach you guys and hire you guys straight out of high school, and then you study at night and you work for them full time.
Oh wow.
So
That's really cool.
yeah. They don't pay you very much though. Like I remember my first salary was like 23k a year. Straight out of high school, and that's basically what we survived on for Monday to Friday. It was like $500 something dollars a week. Yeah, I was pretty much. Yeah, I was still living at home back then, so it was pretty good back then. But yeah, so I started there. Worked for about 12 months there, and then I got poached by a restructure firm. So what they do is they basically buy companies. So if you can think of Pretty Woman. Richard Gere.
Yeah.
That's kind of what I was doing. So we're basically doing the accounting side because there's an accounting side, a law side, and a finance side of that industry. We were doing the accounting, restructure, and the tax side. Yep. So I did that for a couple of years. And then I moved into an ultra high net worth accounting firm. So most of our client base was about 250 mil net worth or greater.
Wow.
And then I did that for a couple of years, and basically the whole time, so 2011, I started as a topless waiter, working for a company called Liquid Infusion. It was run by a guy called Ben Newman, which was a great little mobile bar cocktail company. So we did topless waitering for them, and then occasionally they'd be like, oh, the stripper cancelled and that sort of stuff, and you'd be like, all right, okay, it's time to take my clothes off. So yeah, that was basically the crux of how that started. And then 2013, 2014, I joined a few of my long-term friends now, basically in the Magic Men guys. Yeah. And that was the original crew that still, most of them are still going now. Still, taking their clothes off and that. So I did that for 9 years. I think I wrapped up.
Wow.
Oh, no, a little bit less, maybe 7 years, because that was 2012 to about 2019.
Yeah.
I kind of wrapped up the stripping gear effectively. And then so I was doing accounting the whole way through. And then 2014, basically a few of my mates kept tapping me on the shoulder going, oh, how do I do this? What do I claim here? We go to H&R Block. We go into other accountants. They've got no idea. I think Instagram, YouTube's turned on monetization in 2014. And I had a couple of friends that I went to high school as well that were massive gamers. Yeah. So we just started dealing with content creators and a lot of obviously the Magic Men boys and that. A lot of them dated some of the girls that were dancing, so they became clients as well. And then it just snowballed basically. And
that's really cool.
Yeah.
Perfect way to jump in actually, especially when you've done it yourself. You know all the questions you're going to get.
Yeah, you kind of sit there and go, well, what's this? And then you kind of had to, I guess, learn as you're going, because there was no other accounting firms that were doing it when I we started. There was no one actually to ask any questions to. You would speak to an ATO auditor and they still wouldn't have a clue for you because they'd just be like, I don't know. Like the problem is with what we all do for work is the line between your personal side of the business and your work side of the business is very, very murky. And it's then trying to work out, well, based on the order that you get, where do they draw the line? And then from experience, learning consistently and with repetition, where the line's going to be drawn versus something that's deductible and something that's not deductible.
That's literally what we're going to ask you. Where's the line? But so you're like the OG, started it for sex work accounting.
Yeah, look, I'm sure there are other firms out there and that sort of stuff that have popped up, but we've probably been going a little bit longer. So we started offering this service to people 2014. I'm pretty sure there was another one. I'm not too overly sure off the top of my head when they started, but they were pretty early. Shout out to Red Fox. You know, they've been going for a while now, and I'm sure there were some other ones that were kind of thing. I think with this industry, like, you know, you've got a bit of a shelf life. I'm sure when I get to 60 and I'm old and creepy, I don't think the clientele are going to work the same way as these things. But yeah, no, I've probably been doing it longer than most. Yeah. That's kind of one of those things, effectively.
Yeah.
So, yes, been around for a while.
Yeah.
Amazing. How would you go about the client's income, because everything's cash, really? So is it as simple as you get the cash, you invoice the clients or the strip club? What's the process?
Yeah, so it depends on the industry. That, like, I think the adult industry in general is broken down into a lot of fields. So you'll have escorts, you'll have dancers, you'll have venue operators, you'll have OF, Fansly, content creation side, and they're all very, very different.
Yeah.
And this is kind of where I guess people get a little bit, they try to do multiple at the same time and that sort of thing. In terms of income, it's all treated basically as the same. Like, obviously, whatever income you earn is obviously what we need to kind of declare. Obviously, cash is quite hard to work out effectively. So we've just got to try to work out, well, okay, how much cash did you earn through that period? And, you know, obviously declare what we can. I guess the crux of it comes down to, like, you know, making sure that there's good record keeping.
Yeah.
And it depends on whoever. It all comes down to record keeping. Because if the ATO audits you and you're like, well, I've got all my cash and I haven't shown anything and it's all hidden, the ATO can do what they call a default assessment. So a default assessment is they go, well, they check your lifestyle and stuff, and then they go, we think you earned 150 grand a year, even though, like, you've put through maybe 20 grand on your bank. And then you've got to prove them wrong.
Yeah, but that's what I'm wondering. How do they do these checks? Do you know?
Yeah, so they can check what car you drive based on Vic registration. What insurances do you have? Like, if you're insuring handbags and jewelry and stuff like that, they get a report which basically says, well, your contents insurance is $1 million. You're only earning 30 grand a year. How do you have $1 million worth of, $1 million worth of stuff?
So they're only really going to do that if it's a big jump?
It doesn't matter so much about jump. It's more of just if assets just appear.
Yeah, okay.
Realistically, it's like a data check.
Yeah.
So data going in versus data going out. And if there's any, like, discrepancies or something that's happened that's causing a massive discrepancy in data that doesn't make sense, that's what they flag you for an audit. And then obviously then we go through an audit process.
Do they check things like social media?
Yeah, they do. When they actually start going through the audit process and that sort of stuff and they start digging deeper, they can check social media. So they do scroll through your Instagrams and stuff like that. And if you're flaunting Louis Vuitton handbags and all this sort of stuff, they do understand that a lot of it's for show. Yeah. And a lot of the, like, you know, Louis Vuitton stuff can be fake or whatever else. Like that sort of stuff is quite prevalent in this industry. So yeah, they will look at that sort of stuff.
What about, though, if it's a gift from a client?
So gifts from clients are actually assessable income.
Okay.
So if you get gifts from clients, no, seriously, yeah. So gifts from clients are assessable income. Gifts from partners and friends are not assessable income. So take that the way you will.
Okay.
Yeah. I'm like, do I put myself in trouble?
Yes.
What?
So no, and any gift from a client, like say if you're working in a club or if you're doing content and that sort of stuff, and you sell your content but not for monetary stuff, it could be like, oh, well, you can pay for my trip for me, or pay my credit card off, or some of them go, well, direct deposit into my rent, and they think that's non-accessible. However, that's a trap to fall into. So if you
Wait,
like
so sorry.
go for
They
it.
can pay your rent. They can pay the rent bill, but you will have to claim that money.
Yeah, correct. Yeah, because it's actually income in your name.
Far out, Russell.
So yeah, it's pretty shocking. So, but obviously, like, depending on the circumstances around how they pay, why they pay, and all that sort of stuff, that's what comes into either knowing the industry and not knowing the industry and
Yeah.
understanding how that works.
Yeah, and I guess like regularity as well. If it's like
Correct. Yeah, yeah.
constant,
It's well, more regularity makes it stand out more.
yeah,
If it's irregular, it doesn't stand out as much. However, the basis of the income is still accessible.
yeah.
We heard that the ATO can randomly pick someone to audit.
That is correct as well. Yeah. There is a random audit check and they have a quota that they need to hit. The other thing about auditors and that sort of stuff is, generally speaking, they're not really after a super big audit and to smack you. They're actually there to kind of just make sure that you're compliant. And on their KPIs is basically, did they have a successful audit, yes or no? If they find $100, that's a successful audit. As long as you're compliant, they're happy.
Okay.
So they're not trying to find 20, 30, 40 grand. They're trying to find a successful audit and make sure that you're compliant.
Yeah. And if you get audited and they find $100, it's not like you're forever scrutinized by them. They're like, oh, this company, they're never going to just keep looking at us, are they?
No, not from anyone that I've been told. They don't really follow that sort of stuff. Obviously, like, directors of companies that are consistently doing the wrong thing, like, yeah, there's a pattern.
Yeah.
But the pattern will emerge from entity to entity. And as I said, it's all about data matching. So
Yeah.
they'll match the data from one, and then the same thing's happening to the other, like the other company. And then that's obviously the big thing there.
So all of our girls listening, track your data.
Yeah.
Start
Keep your
ASAP.
receipts and
Yeah, receipts and that
records.
sort of stuff. Like, obviously, the biggest thing that you can probably do is obviously just record keeping. Because if you seem like, if you ever get audited and all your stuff's all over the place, that makes it easier for them to audit you.
So what does that physically look like for someone?
Yeah, so like a good person with good records and that sort of stuff will have like a zero file or another type of accounting software behind it. And then basically they'll track all the money going into their business account, that sort of stuff. Also segregating accounts. So depending on what type of work they do is like the number of accounts I'd probably suggest to someone who's, let's just say you've got a sole trader. So a sole trader is just, you're trading under your own ABN. To segregate your expenses and that sort of stuff, I would, if you're a content creator or dancer or something like that, you'll generally have 4 bank accounts. If you're an escort, I recommend having 5. So the 4 bank accounts is generally your like business transaction account. So that account basically will allow all your income and all your business expenses out of. The second account then is like a savings account, and I recommend you putting your tax money into that account. And that accrues interest, and at least then you're accruing some interest with that money sitting there for tax until you have to pay the tax. The third bank account is your personal transaction account. So if you want to go buy Macca's or you're paying your rent or all that sort of stuff, then I would be like, okay, cool, that needs to come out of your personal bank account. Finally, fourth bank account, that's your savings account for your own personal stuff. So let's just say you wanted to buy a house, invest in some shares or whatever you wanted to do. That account there would be used to accrue whatever's left in your savings account to then go, well, okay, look, I need to save for a car or something. So I'm going to take that money and save that. Escorts, I recommend having a 5th bank account only because they receive deposits. Okay, so if they receive like a deposit from a client, $300, $400, whatever the deposit is, you put it into that bank account, and only when you actually do the booking would you take that money out of the deposit account into the business transaction account. It's only because some of the girls will spend the money before they do the job, and if they've got to cancel the job for whatever reason, they might be sick and everything, at least then they can give the client back the money and not lose the reputation. where some will spend it and then they've got to try to find it again, and they might have been sick for a long period of time, and therefore they haven't worked, and therefore the money's not available, and they've spent it, and then that puts them into a bit of a spiral.
What is the limit that you can claim in the industry? And because a lot of this stuff is, like you said, a bit murky from work to personal life, how do you kind of figure that out?
Well, generally speaking, like, okay, let's you can go back to, like, if you're trying to buy groceries and you might be doing like a fetish show for a client or something like that, like, you'll generally have some documentation as to what that client's asked for. Okay, so therefore, like, if they've asked you to do some sort of fetish play or something like that, you'll obviously have records of them asking for it, and obviously then you'll be able to show the transaction and the payment, and therefore you'll be able to claim it.
Okay.
Okay, so that makes it pretty vanilla and that sort of stuff. It's like, you know, when you sell your underwear and all that sort of stuff.
Yeah.
Like, if you can prove that a client has purchased that underwear or that piece of clothing and that sort of stuff, like leggings and stuff, like, generally speaking, leggings with no branding or anything else on them is non-deductible. However, if you sell, you know, if you're promoting and you're selling that sort of stuff to clients and that sort of stuff, obviously you're going to declare the income, but then you could take out the expense of the leggings and the underwear and everything else that you guys want to do with that sort of stuff.
Yeah.
So, and there's no actual limit with how much your expenses are.
Yeah.
You know, it realistically, like, as long as you can have your income less those expenses, and you can prove that you're being able to pay everything else that you do with the rest of the income, you're fine. There's no actual limit to how much you can deduct.
And there's obviously girls that do sex work and they do the OnlyFans, they do escorting, and then they do stripping. So they'll have like a wide range of different things that they can claim.
Yeah, generally speaking, yeah. Like, if the more they do, the more they can effectively claim.
Yeah.
You've just got to prove that you're making income from all the sources. Content creation's probably the one that you can claim the most for, I feel. Just because, like, you know, travel's easier to prove.
Yeah.
Because you're traveling with content. You know, obviously requests from clients are far reaching, and obviously with those requests obviously then become greater deductions and everything else like that.
So you're saying basically any type of transaction where you're selling something that you're going out for dinner, you just need to keep a screenshot of that proof, like, hey, we're going out for a dinner, like, this is work, have that, and then the transaction, and keep that in a file.
Yeah, so generally speaking, like, the client will pay for dinner directly. That's not really.
But then that,
sort of
they're
thing.
paying for the girl's time to be.
Yeah. So the time that they've paid for would be fine, but just say you bought for that booking, he's paid for dinner, you've had dinner, he's paid for your booking as well. So it might be a $4,000 overnight booking, for instance, or a $700 hour booking, or whatever, GFE experience or something like that. You're basically can deduct anything else that you've paid for that night that he's requested, she's requested. So, you know, that he might have asked for, okay, he wanted Macca's to be eaten on him. Okay, and therefore you had to eat Macca's on him, and therefore, you know, you can then show, well, he wanted Macca's on him, he paid this extra for that, and therefore I'm claiming the Macca's for that night on that expense, basically.
So she's gone and paid for the Macca's.
Correct, yes, 100%, yeah. Because generally speaking, if your client requests stuff, that you would already have these already set up. Obviously, you can't declare the income or the money that you've received if they've bought it and they've brought it to the thing. You're obviously just declaring your part that you're owning effectively. So you get some, like, really interesting ones, and more so the interesting ones are like, I've learned a whole heap of new fetishes that I never would have thought that would be a thing.
What's the most surprising one that you've heard of?
Most surprising fetish. Gigantism was an interesting one for me.
Yeah, I was really
Gigantism one?
intrigued.
Tell me what it is.
Oh, you don't know it?
No, I don't know it.
Oh, okay. So gigantism is basically when they want to feel really, really small, and you're, like, really huge, and you're doing whatever to that person. The first time I ever really saw it was like someone had to pretend the client was jelly beans or jelly babies. Sorry, so little jelly babies. So they were reenacting that the jelly baby was the person asking for the content.
See, I think when people go fetish, they just automatically go, it's really sexual. And so that's like
No.
sexual
Balloons
at all.
is another one. So some people do balloon play,
Wow.
which is a fetish and that sort of stuff. Yeah.
Are they jerking off while are they getting off while this person is like?
I'm going to assume so.
Yeah.
I can't really
You didn't
tell you. I'm not there, so I'm
But
sorry,
listen,
but yeah, I would assume so. I don't.
Yeah.
Yeah.
It's just
That part I
it's
don't
so-
really know. I'd have to ask like one of the providers and that sort of stuff
Who
for
wants
it.
to be a jelly bean? I'll be a giant.
Yeah, like it's like financial domination, so FinDoms and stuff like that. Usually it's something to stem off that,
Yeah.
which is it's always an interesting power dynamic.
Yeah.
Usually the more powerful a person is, the more they want to be dommed from a fin thing. It's more of like a release mechanism.
So when maybe a creator or a dom or anyone starts within this industry, is there a bit of like an income leeway until they have to start claiming?
No, as soon as they're like, it's a very hard kind of industry to prove that you're doing it as a hobby.
Yeah.
So you can get exemptions for income if it's if it's classified as a hobby.
Yeah.
If your partner's paying to you for you to do it as a bit of a whatever type relationship that you have, and the partner's paying for it, then it's love and affection, and therefore we can leave that alone. But it's as soon as you start offering that service abroad to whoever, whatever, it's very hard to say, oh, it's just a hobby.
Okay.
Because like the ATO stance is the general norm stance is like, well, how is that a hobby if you're getting paid for it?
Yeah.
Sorry to cut you off. So, for example, let's say this girl's doing FinDom. These guys are paying her for her time. She's writing everything down. She's claiming everything. Is she getting taxed on those gifts that they're all?
Yeah, 100%. Yeah.
So for a guy to give you, I mean, yes, it's work, but so many girls would be like, no, it's a gift.
Yeah. You could try to argue that it's a gift. It just
birthday present or something.
Yeah, very hard to, as I said, like if it's a client relationship, it would generally be accessible. However, if it's
They're my best friends.
I've just got a lot of friends. Like if it's friends or family or a partner, it's obviously they're not accessible.
Love and affection.
Yeah, love and affection. Yeah.
There's so many different avenues that you would have had to figure out.
Yeah, so this is obviously as we've gone through, we've been audited for lots of different things, and it's like understanding, well, what can we, it's what the facts are, and then making sure that the story makes sense and can actually be backed up by the facts of what's happened.
So you've been audited for working with.
Oh yeah, we've had probably you're probably looking at like 80, 90 audits a year.
Oh, wow. Oh, so clients audited or you personally audited?
Oh, clients audited, that sort of stuff. Yeah.
And you have to step in.
100%. Yeah, that's
Yeah.
part of our job. So obviously, if one of our clients gets audited, part of our job is obviously then to, if the client wants us to, prove the facts and that sort of stuff around it, and that's kind of part of what we do. So obviously, our job is to make sure that we do record keeping, all that sort of stuff. Then obviously we do the tax returns, tax planning and all that sort of thing. And then on top of all that, obviously then if there's an audit or something like that to happen, another service obviously we have to have is do that. Yeah. The more risky you are, like you can obviously have audit insurance and that sort of stuff. So that pays for the professional time that you need to pay to get an audit, to get through an audit.
Oh, wow.
So it's pretty cheap to have. Like I think it's under $300 for audit insurance a year. Okay, so what audit insurance is basically when you get audited by the ATO, they're going to ask your accountant stuff. You might have to get if it's really advanced, you might have to get a tax lawyer involved or whatever, depending on what the type of transaction they're chasing or if it's the depth of the audit. Audit insurance basically covers you from copying the bill from the accountant or the lawyer and that sort of stuff, because there's a lot involved in an audit and it requires a lot of time effectively from the accountant's perspective. So you think about it, most accountants will charge anywhere between $200 an hour to $1,000 an hour. I guess where I used to work and that sort of stuff, like I was $2,500 an hour.
Wow.
Because we used to deal with that.
Good rate.
I know.
Yeah, no, it wasn't a bad at.
Is that specifically for all accounting or just auditing?
That's specifically for all accounting. Different accountants will have different rates. Depending on the type of work. Like liquidators are generally accountants, but they're not tax accountants. So unfortunately, not all accountants are what people perceive as accountants.
Yeah.
You have tax accountants, you've got auditors, you've got liquidators, you've got like financial accountants. They all do different things. So generally speaking, with like insolvency practitioners, they charge a lot of money, but because a lot of their clients are effectively bankrupt and that, they're not always getting paid. They might charge $3,000 an hour, but only get $1,000 an hour because there's not enough money for them to get paid. Tax accountants could be anywhere between $200 to $1,500, $2,000, unless you're dealing with like the top end of town. And then I guess as I said, like $2,500 was my max thing. The guy who was my boss at the time, he was about $3,200 an hour. But most of our clients will run on. Yeah, that's it. I definitely don't charge those hourly rates now. So very, very different now.
Can we ask what your hourly rate is?
Yeah, so our hourly rate's about $3.50 an hour. It's kind of what we base our stuff on. However, most of our clients, like we do fixed fee.
Yeah. Okay.
So we just say like upfront, this is how much it's going to cost you. So there's no hidden secrets. There's no whatever. You know how much it's going to be per year. And just depending on the complexity, what you have going on. I guess how many transactions or how much work.
That would be nice to know, because I think like with our accountant, it's $300 now for him personally, but we don't need to talk to him. It's always with his bookkeeper.
Yeah, not having a tax bill is not necessarily showing a good accountant.
No,
not necessarily. Minimizing tax is important, but like when we talk to clients and that sort of stuff, like you kind of want to set yourself up. So like I don't know how nerdy we all are here, but I'm pretty nerdy and I'm a bit of a gamer and that sort of stuff. So generally speaking, when we look at building a player or any type of thing, we look at a structure and how we're going to set this structure up. We can set structures up in regards to the fact that like it might be super tax efficient, or it might be super pushed towards getting finance. So your ability to borrow money to buy assets, or it might be a lot for asset security. So when we were working in like the ultra high net worth clients, so you're working with your 250 mil plus clients, they're worth, $1 billion, $2 billion, obviously some pretty large families. And, I'm sure most people would probably know them. The biggest thing for those clients was like, okay, well, what type of structure do we do based on the family's personality and who's running the family office effectively after the fact? And what we would do is basically go, well, okay, like your small businesses that usually stay relatively small are super, super tax efficiency. So minimal tax whatsoever. That's great. Go try to get a loan. All of a sudden, I can't buy a house. Oh, I've got to do all this to buy a house. I can't do it.
Yeah.
And therefore, you can't grow, you can't invest, you can't do anything else like that.
You like to look at the future and the long term.
Well, we need to look like our whole holistic thing was like, especially from where I've come from, was I've got to look intergenerational.
Yeah.
Like we were looking 1, 2, 3 generations into the future.
I love that.
And obviously that was a huge part of what we did, and that's part of the DNA of what we bring in now. With the adult industry, we're making a lot of money. Generally speaking, most people are making stupid amounts of money. We have got typical clients that will go and blow it and whatever, it's up to them. But then we have other clients that are like trying to set up their kids and their kids and all that sort of stuff. So, they'll put themselves through like super out there topics. They'll put themselves in the media. They'll do whatever it takes, because really what they're trying to do is set their future generations up.
Yeah.
And they'll cop whatever it takes on social media to set themselves up.
Yeah.
And all the backlash and all the stigma and there's plenty of it, but they're setting themselves up.
Yeah.
I've spoken to a girl on the podcast, and she was saying her and her husband do it, and like
in a small country town in Queensland, and they're older as well, so it would be such a brave thing to do.
And they've got 2 kids, and they're like, we're setting their future up. Like, we don't have to go to work. We can be at home with them all the time.
Yep.
We're putting stuff in for them.
Are they face out or?
Yeah. So what was her name? Lala.
Okay, I thought it was someone else.
She was,
but
she was at the awards night.
She was. We met her there. Yeah.
She won the, what'd she win? Fetish, best fetish.
Oh,
Yeah.
okay.
Yeah,
Yep.
fetish.
I do remember that. Yes.
Yeah.
Yes.
How can sex workers protect their assets like houses, cars, savings if something goes wrong legally or financially?
Well, okay, so let's go back to the third part of that triangle that we're talking about before was obviously asset security. So with asset security, it depends on what you're trying to protect.
Yeah.
So I look at like adult industry workers like professional athletes, effectively. Like it's the same type of thing where generally speaking, one part of the couple is earning like 30x what the other one is. Okay, the other one will fill in and do what they need to do, especially with a lot of OF creators and that sort of stuff. Their partners will do like guest shows. I don't know how else to describe it. Like, but a good way to put it. Yeah. So we treat them as like, okay, well, if you're a professional athlete, you know, you're an AFL football player or an NBA player or something like that, and some of them are earning pretty much the same type of money as some of the AFL stars. So why aren't you treated any differently?
Yeah.
So we set structures up that are identical to those structures.
Okay.
So basically what we're trying to do is like, you know, we're part of our, I guess, role is to make sure that when we set you guys up and that sort of stuff, you know, what's your partner and family dynamic like? And as good as you and your partner are and, you know, whatever, unfortunately, we've got to be the stick in the mud and kind of go, well, shit can break down. So let's make sure that if it does happen, let's protect you.
Yeah.
Because, you know, as much as like, you know, some relationships are with 2 to 3 years, as the creator gets bigger and there's more money, or even if it goes the other way and there's less money, you know, the guy goes, well, there's no more money and the gravy train's ended. I'm ditching and then I'm taking whatever assets we've built together. But now the creator's not making as much money and therefore they can't get themselves back up there.
Okay.
Or if they're making a shitload of money and then the partner's like, well, you've got all this money and all this stuff, I'm taking half of it.
And so what do you tell the creator to do with their money so that
So generally speaking, we'll put into like different asset structures, companies, trusts and that sort of stuff. Like we'll look at like what they call like a bloodline trust. So a bloodline trust is similar basically to a family trust. We set up with an estate lawyer. And basically the assets can only be handed. So you're holding those assets in trust effectively. Even though they're technically like your assets, you're still holding them in trust.
Yeah.
You're holding them in trust for your bloodline. And your bloodline is effectively like, if you have kids, you know, your DNA and that sort of stuff, depending on whatever the trust deed says, the money goes through to them. And that's basically how most of like the ultra rich in Australia transfer their assets through, so that like, you know, just say, you know, you guys have kids, you know, they get partners. And therefore whatever you're saved for them, their partner could take half of it. So to stop that from happening, we do a bloodline trust. And that allows the money to only go to your bloodline.
Yeah.
So if they have kids, it goes to them. So, you know, you're the grandparents now and, you know, we just make sure that those assets go through.
So that creator has a partner, that creator puts her stuff in a bloodline trust, and if she has kids with him and then they split, he still has no access. Like,
Only the kids do.
okay.
Oh, it's a good
and
idea.
that mum, the creator, can still take it back. Like it's still hers.
It goes into the trust. So you've got control over it. But whenever you put assets in a trust, you've got to pretend that they're not really your assets anymore. They're the trust asset. You might have control of it. It's like if you own a company and you put money into a company or assets into a company, it's the company's assets now, not so much
What
yours.
advice would you give to someone starting in the industry, financially speaking?
Probably the first thing is just make sure that you set up your bank accounts correctly. That makes it easier for an accountant or any person to track. That's probably the first thing that I would do. So going back to your 4 bank accounts or your 5 bank accounts, easiest way to do it. You can create them on the app as well. Like you don't even have to go into a bank anymore. You can just add bank accounts on an app.
Yeah.
So super easy. That would be the first thing that I would probably look at doing effectively. And just seeing if the financial results are also worth, I guess, the downsides of the industry as well is always a conversation that I've got to kind of have with people, because, you know, like even myself, like it even took me a while to kind of tell everyone at like big accounting firms that I was, you know, taking my clothes off on the weekend effectively. So yes, I've been there and done it. I think there was less stigma being a male. So I guess I was, you know, it was a bit more of a, that's funny.
Okay.
Yeah, they couldn't imagine me, like obviously an accountant.
Yeah.
It's not really the most opposite of Viagra being an accountant. Yeah, it's definitely one way to do it.
Yeah.
If they still try to be controversial, then obviously you're going to cop some stigma on that sort of stuff to the general audience. Certain banking loans and that sort of stuff. Like I know right now we're looking at a client buying an establishment. And that is actually really hard to get a loan for, like you would a normal other business.
Yeah.
Without having, well, it's still generally harder to get a business with no background, no assets, no nothing. So that's hard in itself. But especially in this field, it's actually a little bit harder.
Yeah, because I remember I applied for a car finance and you know, before I actually went and got checks, I was just having a conversation with them and they're like, yeah, that industry. It's known very correlated with money laundering and everything.
Oh, no. So getting car finance and that sort of stuff's super easy now.
Okay.
Yeah,
I got
like-
mine on car finance.
Yeah. The only trouble we have is if they're buying like businesses that are in the industry, and that becomes a bit harder.
Yeah.
So yeah, that's probably the big part where you're kind of like, well, okay, I've got to buy this business, and it's an industry business. Obviously that becomes the challenging
It's
part.
like a liability.
It's also it's more so the fact that there's a lot of cash involved.
Yeah.
So if you're trying to buy an establishment and there's a lot of cash being involved, and you're trying to buy it at a higher valuation because you know how much cash is going through, the bank and the financials only see what they see.
Yeah.
So therefore, the business isn't going to be valued with as much as what everyone knows it should be valued at.
And sorry, is this like, let's say, a strip club or a swingers
Strip
space?
club or a brothel or something like that.
Wouldn't they want a business to be bought to then the government, businesses help the government, everyone's getting
It's a risk
income?
factor. It's like, would you borrow? Would you if I'm only earning $20,000 a year, would you lend me $1 million?
Yeah, true.
Yeah.
Yeah.
How long is it going to take me to pay it off? I'll be dead by the time I pay that off.
Well, I guess that's a, like, if I had 20 grand and I wanted to buy $1 million house, like, they wouldn't allow that anyway, whether or not
Exactly. So it's
work
the
or
same
not.
thing, but they just kind of obviously it's just because of the fact that there's a huge proportion of cash.
Yeah.
Okay. Oh,
Yeah.
okay. I'm understanding. Sorry.
Yep.
Yeah. Gotcha.
So obviously with the cash money and that sort of stuff, they might not declare it, and therefore if it's non-declarable, the bank just doesn't use it in the valuation.
Yeah.
And therefore obviously that's not a thing
Gotcha.
anymore.
Okay. And then going back to our other stuff with the girls and like what you would tell them to do for all of our workers, would you tell them business, sole trader? What would their first goal be going into business?
Obviously everyone starts off as a sole trader. Yeah. So generally you want to be a sole trader until your profit, which isn't your turnover, your profit is over that 135K threshold. Then you might look at going into a company and that sort of stuff. But then it solely depends on, well, how much money you're stripping out of that company. Because if you take all the money out of your company into your own name again, well, then you're getting taxed in your own name. And therefore, there's no benefit to having a company.
Yeah.
And then a lot of players can get caught in what they call like a Division 7A loan, which is when you take out more money out of a company than what you technically should. And then that could trap you. So we don't recommend it until you've got relatively good money management skills
Why would you even go from a sole trader to a business?
to a company.
Yeah, to a company.
So generally speaking, lower tax rate, so 25% flat tax rate, which is once you go above that 135K threshold, you're starting to go to 37 cents or 37% in the dollar. So any greater than that, you're better off doing the company at 25.
Okay.
So obviously that's probably the main benefit. Obviously then if you start buying assets and that sort of stuff, like a bit of asset security and that sort of thing to put into a company, as well as like with social media and viewership and Instagram becoming a bit higher, if you get a defamation case or something like that, at least then like your assets are somewhat secure and there's a separate.
I've had
Have you?
that. Where I sent a letter of defamation. It couldn't go anywhere because no one had any assets.
Yeah. Look, this is the the funny part with what we do is like people will like attempt to sue everyone, and like just to get done in the courts like minimum 10 grand.
Oh, yeah.
To get them into court's 50, and I'll sit there and go, you're suing someone with no money or
With
no
nothing.
nothing.
Yeah.
What's the point?
Yeah.
That's what my lawyer said. He's like, have they got anything? Nah. Cool, we'll leave it there.
Yeah, like there's no point.
Yeah.
Like it's one of those things, and obviously the job of us is to make sure that it looks like you've got nothing. So our job is to make sure that all your assets are somewhat hidden and that sort of stuff to the best of our financial abilities, and that kind of comes down to that asset security side point.
Yeah.
Okay. There's so much information that I didn't even know. That's a lot. But
Yeah.
thank you for
That's all
sharing
right.
everything.
Anytime.
I do want to leave with one question that we ask everyone. What's something, doesn't need to be like sexual or anything, that nobody knows about you? Like some interesting fact.
No one knows about me. Ooh. I'm a massive anime gamer nerd. Like that's pretty accountant. I guess that kind of probably things.
Do you have a full setup at home, like 3 computer screens and set and everything?
The game is set up.
Oh, that's at the office. Yeah, 100%.
Oh, cool.
Yeah, no.
Cool.
So my the computer and that sort of stuff set up for work purposes and that sort of stuff
Okay.
is obviously not it's greatly used for a lot of work, very heavy Excel spreadsheets.
Yeah.
Yeah, 100%.
Okay. You're a massive nerd for spreadsheets.
Yeah,
Is that
exactly.
your
Yeah,
favourite?
massive nerd for spreadsheets and stuff like that.
Your partner catches you at night on the spreadsheet. Like,
I love it.
Yeah, no, that's probably the only thing that people really don't know
I
about
love
me.
it.
Yeah. And if people want to reach you for your services, are you in person? You just said you had an office.
Yeah. Look, we are in person and that sort of stuff. Generally speaking, most of our people will phone call or Zoom and that sort of stuff because we're obviously dealing with everyone from all over Australia.
Yeah.
I guess like before COVID, I think a lot of people liked coming to the office. And we had an office in Collins Street at the time, but now it's kind of in Melbourne for people that aren't in Melbourne. But then obviously once COVID happened and that sort of stuff, I think we were spending like 70 grand a year on rent, and I was just like, that's a bit overkill. So yeah, then we decided to go more remote. And then I build factories. It's kind of my side project effectively. And obviously we just moved into one of those factories and that sort of stuff as part of the office setup
Amazing.
effectively.
Yeah, based in Melbourne.
Yeah, so we've got a Melbourne office. We've also got a Brisbane office.
Yeah.
So yeah, we've got the 2 offices, which is pretty cool.
And with yourself, do you personally work with people? Obviously, you've got a team, so you can't work with everyone. So
No. So we've got like over last time I checked, which is probably like a month ago, we had over 1,200 clients. 1,200 clients, which are groups, so it could probably go out to about 1,500 or so clients, individual clients or individual entities type thing. So no, I don't physically work with everyone, but everyone has my number.
Yeah.
So if it's a client of mine, they will call me, generally text me, whatever, FaceTime. I'm like pretty much work 7 days a week. So like, I get the occasional Sunday morning wake up phone call and they're like, oh, Ryan, we're finishing shift and I don't know what we're doing with this cash. And I'm like, well, okay, let's work out how much it is and what we should do with it.
Yeah, like, go to bed. I'll call you after.
Yeah. I remember when we started, there was like some like 3 a.m., 4 a.m. ones, and it was like, girls leaving the club and they're like, oh, I've got to deposit this cash. Ryan, how much do I deposit? And you're sitting there going, it's like 3 a.m., darling. Like, I don't know which way's up at the moment. I'm still working myself out.
I actually had a client call this morning. It was like 7 a.m. and he's like, can you answer the phone? And I was like, just let me have my coffee. Like, text me what you need. I'll call you after that.
100%. Yeah, totally. But no, I do try to keep in touch with all my clients and that sort of stuff. Obviously, I don't do all the personal bookkeeping and that myself. I do have like 7 other people that work for me.
Great.
That actually help me do everything because I physically couldn't do everyone's. So yes, I do have a team that helps. But no, generally speaking, I'll present all the information generally to our clients. So I'll generally do the first meetup, talk with them and that sort of stuff, go through it, get all the information. The team does all the work and then I'll review it. So I'll review all the work and then I'll present it to the client.
Amazing.
So that's generally how we work it.
Perfect. Great. Well, we'll link all of your services and your contact
Thank you.
details in the episode. Thank you so much for coming up today.
No, thank you very much for having me. I appreciate it. Enjoy.
Well, thank you everyone for watching. Please like, follow and subscribe and we'll see you on the next episode. Bye.